Good afternoon again. This is Brian Shannon from Alpha Trends Blogspot. Today is June 12th. It's Monday, and let's go ahead and get right in and take a look at the market. Anyone that's surprised by the weakness in the market here really hasn't been paying attention to the message of the market lately, and we've been examining that message here on these charts, primarily through the Qs. And I just realized I have the semiconductor holders up there, so let's type in the 4 Qs, and you can see that the market closed right on its lows at 37.40, taking out last week's lows, where a lot of people, myself included, thought that maybe we were going to see a bounce. Difference is we had stops in place below that low, and as a result, you should not have suffered in this little downdraft here as an extension from the recent weakness. Let's go ahead and draw those trend lines in again on the weekly time frame to get some bigger picture perspective. And we'll go ahead and first start with this uptrend line that we've been looking at. And we see again that we're right at that level. And this low right here from October of 05 is actually $37.33. I think a lot of people have been looking at last week's lows saying we need to get, test the 49-cent level. So perhaps tomorrow morning we can get some kind of little washout volume and maybe a turnaround. But again, when I say I mistakenly use the word turnaround. A bounce is what we're looking for. A very short-term turnaround in the very short-term trend that we can see on the 1, 2, and 5 minute time frames. There's nothing that's going to happen tomorrow that's going to change this weekly picture at all, or the daily picture, which obviously we remain in a horrible downtrend, as I've been stressing here. And yesterday in the Saturday video about the Qs, I was saying the most likely scenario for the market was a test of these recent lows. Well, we got that today. Now we've got to take a look at the market on the shorter term time frames and see if there's anything there at all that can tell us that it might be time to look for a turnaround. And guess what? There's really nothing there yet. If we see any type of turnaround, again, it's going to be a short term event, and it's going to be good for a trade, and it might be a pretty powerful trade because we could squeeze the shorts pretty good in here. But looking at the trend line that we've been looking at, it still seems to be matching quite closely with that 5-day moving average, which is downtrending as well. We can see that's up right now about $38.30. And looking at an hourly time frame, again, go back in the archive and check about a week or so ago. I did a week and a half ago. I did a video on MACD divergences. Now it's starting to diverge, but that doesn't mean we buy. What this means is the selling intensity isn't as strong. That is, the short-term trend isn't quite as low, and we're seeing that as well with the volume. You can see the volume on this move was much lower than the move we saw today. We've got a little bit of a bit heavier selling towards the end of the day as people realized the lows from last Thursday weren't going to hold. So I think that's where that late day volume move came from, is people liquidating their positions who were initially looking for a bounce. But right now, even on this short-term 5-minute horrible downtrend, no evidence at all of a bottom. Now, I was looking today at the 2-minute time frame, which we've been looking at quite a bit in here recently. Let me just change a couple things around. I'm going to get rid of the VWAP for right now just because it's going to be a distraction to what I'm trying to do, and I'm going to change the scaling and make it snap to window. Let's go ahead and look at 3 days worth of data, because we've been looking at the changes in trend here on this 2-minute time frame, where last week on Thursday the market came up rather. We saw the short-term moving average cross through the intermediate-term moving average. The market then rallied to the longer-term downtrending moving average. That moving average flattened out. It took out the highs, and I was kind of looking for that to happen over here today as well, that we had that short-term moving average to cross out, but it never got above that high. I will tell you that I did buy a small amount of Qs right in here, anticipating potentially this was an inverted head and shoulders move, and I think we'll probably be able to see that better on a 1-minute chart. So let me do that, and we've got it snapped to the window. But here I was looking at shoulder, head, and shoulder. I had purchased it right in here with my stop just below there at 84 cents. So I took a very small loss. I was anticipating a move back higher, and I was going to add to it right there. It didn't happen. It cost me very little to make that trade. And actually, I got short here towards the end of the day. I even shorted it right over there. But we're not going to examine every trade that I do, because that's not the point. The point is, let's listen to the message of the market and see how we can use that message to go forward and try and find more profitable opportunities. So here, even on a 2-minute time frame, we noted, and again now I'm going to just change it back to 2 minutes, so or 2 days rather, so we can see a little bit better. But on the Saturday video, I had mentioned that this move right here was looking like a in where was it? Let me just back up and go to 3 days, because now I can't even see the pattern I was looking at. I think it occurred on a larger picture. Yes, here it is. And this was looking like an inverted cup and handle, and I had mentioned that breaking below that support at 38.10 could potentially have some disastrous results and lead to the test of these lows. Well, that's exactly what happened. We saw that initially the market searched for a little support in this level, but as it broke down, that's where the sellers reestablished that they in fact did have dominance. It looked like maybe accumulation. That quickly turned into no, just a pause within a downtrend. And when you're looking at those moving averages crossing, you're saying, well, potentially it's accumulation because the most recent move was lower, but we don't know after the fact if it was accumulation until we have a markup or until it breaks back down, and then we say it's a pause within the downtrend. And reversals are a lot less common than the continuation of the trend. That's why I made a very, very small bet on the Qs and kept my stop very tight, so it didn't really hurt badly to take a little loss in there. Bottom line is the Qs continue to act horrible. There's no evidence of a turn in here. Perhaps we're going to get some evidence tomorrow, but you would think that after such a huge decline, and for the Qs, this is a huge decline in a short period of time, that we would start to see some kind of firming up. We're not seeing it. I think there's too many people searching for the bottom. That's why it remains elusive, but we'll continue to monitor and see what happens. Let's take a look at the stocks I had mentioned. We'll go real quick through these. COGO was the first one I was looking at as a potential long. I told you I was looking for a move, potentially a move past 1360, but I was hoping to get a lower high and then a breakout. That never occurred. COGO is off the list. IFO, I was looking for a move on a break past resistance. This is why you buy strength, not weakness. Had you bought weakness even over here, it would have turned out to be disastrous in this particular stock. But IFO never moved past that level. What looked like a correction is now looking like a crash in this stock, and it might be following the path of ERS that looks very similar. ERS had a similar massive decline, so stay away from that. Very dangerous stock right now. New York, NYNY. We said getting back above 610, that we would put our stop below here. The stock was weak from the open. Now I got to say, New York is off the list. It's going to need too much healing in here before we continue to look at that as a potential long candidate. TEVA Pharmaceutical, TEVA, wanted to get short below 36.30 on this one, which was right there with our stop. I thought at 36.70, which is way up here. If you got short below 36.30, I would say that your stop right now probably ought to go maybe about 36.75. The other alternative entry I said was to enter the stock near 36.60 with a stop at 36.90. It hit a high of 36.88. So you shorted up there, you got lucky and didn't get short. You get stopped out. I would say at this point, probably lower your stop on that one to about 36.5 or so. But Teva still looks like it has the potential to continue down. I was originally looking for a target down close towards $35 a share. I still view that as reasonable. But if this market starts turning around, be quick to cover these things because they're all going to bounce pretty hard. New River Pharmaceuticals, NRPH. Here's a stock that it didn't really trade much volume today. Let's take a look at it. It was only 136,000. You can see the 20-day moving average of volume was 502,000. Now, if I had expected a low volume move like that, I would have never recommended this stock. I did get involved in the puts that expire this Friday. I bought the June puts, the June 30 puts, and hopefully we can see maybe a gap down. I'm going to be pretty quick to cover those because the clock is ticking hard on these things. They're at the money, so I'm going to get some good movement as far as if it starts declining, I'm going to get some good participation in that. However, meaning that it has a high delta, that point for point pretty much at this time. But if it starts turning higher, it's going to work against me as well. So I have to be careful there. International Paper, IP, we were looking for a move below $32 a share, which occurred right over. Let's take a look at when that occurred. below $32 a share occurred right here with a stop at 32.50. If you're still short in there, I would say set your stop maybe above these high, maybe break even. So break even on INPH and New River Pharmaceuticals. If you're short, I would say your stop goes above $28.30. So you got to have a pretty decent little profit in there. But again, liquidity is going to be a real issue in that stock. So we continue to have zero evidence of a bottom. The market is getting more deeply oversold each day, which increases the chances for a snapback rally. But it does not mean that you should be blindly buying in here, just hoping that it's going to turn. Let's wait for some evidence, see if that comes. Maybe we get some washout on the open. Who knows? It's anyone's guess. I will be back later with some more information. And meanwhile, thanks for your time. Thanks for visiting my blog. This is Brian Shannon, and have a great evening.